I'm Jim Kramer, and welcome to my world.
You need to get in the game.
Firms are going to go out of business, and he's nuts. They're nuts. They know nothing.
I always like to say there's a bull market somewhere, and I promise
Mad money. You can't afford to miss it.
In Getting Back to Even, the latest addition to the Kramer canon, number 2 on the bestsellers or something. Yeah, I tell you to beware of bogus upside surprises. You want to know what a bogus upside surprise really looks like? Just yesterday, we got one from a totally iconic American company with an unbelievably awful management. Kraft. And that's the subject of tonight's Sell Block. Sell, sell, sell! On Tuesday, after the close, Kraft,
the House of Pain,
reported the kind of quarter that the press calls better than expected. Yet, surprisingly, the stock was down yesterday. This can be confusing for investors. You think that the company beat. You think it raised guidance. Isn't that what the headlines are saying? You can't go by the headlines. If you look beyond the earnings per share number, you can tell that this was actually a worse than expected quarter. When they have these bogus beats, you know what it makes me think of? The dance floor. Right? Why am I the only one dancing? Stop This Beat is Killing Me, except for I don't sing that evacuate the dance floor. I think evacuate the Kraft floor. These beats are killing me. To paraphrase renowned German stock seers Cascada. And it's because of this alleged beat that we're evacuating Kraft, we're sticking it in the sell block, and are you ready, Ski Dad? The company's just awful CEO, Irene Rosenfeld, is now officially on the wall of shame. First, let's take a look at this bogus beat. Kraft exceeded the street's earnings per share estimates by 7 cents, but its revenue fell by 6%. Street was only looking for a 2% decline. That's miserable. This makes me see this upside surprise as contrived. A real upside surprise, one that indicates business is actually better than we thought, comes from better than expected revenue, the sales line, the top line, rather than things like cost cuts or buybacks. This quarter was about as tasty as Velveeta. And Velveeta is specifically designed to be eaten after thermonuclear war. Hence this nasty Velveeta mid, because Velveeta's solid and tasty as a brick. Now, not only did Kraft give us a bogus beat, it also came through with a totally misleading guidance boost, too. With just one quarter left in 2009, Kraft raised its full-year earnings guidance by 4 cents. Remember, that's after beating the third quarter estimates by 7 cents. So what was Kraft really doing? It was effectively guiding down for the fourth quarter, despite headlines like Kraft profit falls, but company raises outlook for year. That came from the Associated Press. The numbers imply that Kraft earned 41 cents in the fourth quarter. That's 7 cents below what the street is expecting. There's more going on here than just misleading headlines. Kraft is in terrible shape. Its fundamentals are declining. And the more I see, the more I think it's botching its attempted takeover of Cadbury. Kraft is losing market share, and for this kind of company, success is all about the war for shelf space in the supermarket. It's a slow war of attrition, fought for feet and even inches of space, and right now Kraft is losing. According to Nielsen, Kraft gained or held market share in only 34% of its U.S. retail business. That's down from 45% a year ago. It has gone from bad to worse, people. You want to own a food stock? Go buy General Mills or Kellogg. Sell Kraft. At this point, I go so far as to say that the bullish thesis for Kraft rests entirely on its successful buyout of Cadbury, an acquisition I don't even approve of. I thought Kraft should have gone with a health food stock like Hain Celestial. And it's looking less and less likely, to me, that Kraft will be able to pull this takeover off in a way that's good for Kraft shareholders. Kraft's initial bid was rejected by Cadbury, and now the company has until Monday to make a formal offer. Given the fact that its stock has fallen since its initial bid and its disappointing results, I think the deal is going to be much harder to execute than it could have been. Plus, Kraft has tough conditions that might simply might not allow it to pay enough to satisfy Cadbury shareholders, especially given the good results Cadbury delivered in late October. Let's just say the aroma